on Business Incorporated today. Nigeria's inflation surges to 22.41% for April. And we'll bring you updates on African Growth and Opportunity Act Conference, which is going on in South Africa. Top on the list is the venue. And Zambia government threatens to pull out of power plant projects. Good afternoon. Welcome to Business Incorporated here on Channels Television. And we start right here in Nigeria, not our usual one, but this story is like the biggest story going on in the country right from yesterday. It's no longer news that the Central Bank of Nigeria is now operating a floating foreign exchange rate by abolishing segmentation in the currency market. And consequently, all segments have been collapsed into the investors and exporters and window. That's the I and E window. At the close of trade on Wednesday, June the 14th, the Naira slid 29% to 664 Naira for a dollar at the close. That's in Lagos, according to FMDQ. The Central Bank of Nigeria earlier fixed the rate it sells dollars to exporters and investors at 610 Naira 20 kobo, devaluation of 22% from Tuesday's managing director. Well, earlier today on our breakfast show, Business Morning, Ladi Williams spoke with the managing director of Optimus by Afrinvest, Mr. Ayodeji Ebo, on some of the consequences and impact of this move.
There will always be a price. There's what we call price discovery. Over time, initially, we may see some knee-jerk reaction, everybody being skeptical, both the buyer, both the seller, trying to see where the floor, where there will be a middle point, is expected in any market. And over time, once everyone sees there's confidence, what we would expect to see is that we would begin to see more inflow channeled through the official market. CBN is able to back this up with supply at the high and new window. What we should even see is an appreciation of the dollar at the parallel market, because now it has taken away speculation. PTA, BTA, for all those that round trip, there's no incentive for people to buy and want to resell. So that would close the gap as we progress. So I think that the fix is to follow it up with that supply, such that Nigerians will not feel that impact significantly. Because if it's not followed up, we'll see that shift in the parallel market. But consistency is key. If we follow it through, it is expected, because for them, they now know that it's a free market. You can come in anytime, you can go out. If they receive dividend, they can repatriate their dividend, which will be positive for us, because in the last 3 or 4 years, the domestic investors they have been the major driver of this market. And what we're seeing now is by the time they come in, prices would also increase. So we're seeing early bird positioning, especially for local investors, in anticipation that foreign investors would also come to the market.
Well, I'm sure there'll be more consequences and impacts of this unification of the exchange rate in Nigeria, and we'll certainly bring those to you in our subsequent bulletins and programs. Now let's go to the markets now, where for Africa is a lot of negative, beginning with Nigeria. Well, there was a huge surge in the market, the NGX, earlier before intraday, where the market hit 60,000 index points. But as at the time, as intraday, we saw that drop. Profit taking started really early, and we saw that the NGX was down 0.78%. South Africa is also negative 0.44%. AGOA of Egypt also negative 0.25%, and Kenya closed 0.33% in the red. Go to the Middle East now, where it's mixed. Abu Dhabi is in the red, 0.21%. Dubai is, however, on the flip side, 0.37% in the green, and still within the region. Saudi Arabia, 0.17% positive, and Qatar is negative 0.20% at intraday. Let's move over to Europe now, where summer has begun with a few very warm weeks, but also with some initial problems, including wildfires. Talk about extreme weather. We have Lars Holzer joining us now to give us details. Hi, Lars. Good afternoon. So, paint a picture for us. What's the current situation there?
Yeah, thanks for having me. Well, it's really a great summer so far if you're enjoying going to the lakes and to the beer gardens, because it's been really warm for weeks now, and there was hardly any rain, none at all in about a month in Berlin even. But this is all a bit troubling already too. Every day without rain increases the threat of wildfires, and the first couple of fires of the season have started about 100 kilometers to the north of Berlin. The fires are currently under control, but the forest is already so dry that it seems clear there will be a lot more fires this season. They might not be as big and dramatic as in some other parts of the world. Just think of North America right now, where we have wildfires in Canada that impact the air quality in New York City. Or think of the wildfires in California that have been growing in size every single year. But even with smaller fires here, that's a very serious problem for forestry, but also for the agricultural sector, because farmers have to deal with the drought too, and harvest is down.
See this impacting economic activities over there?
It does, and the economic cost will rise, not only due to wildfires, but generally extreme weather events, including storms and flooding. Just yesterday, we've heard from the Association of Insurance Providers in Germany. They say that insurance premiums for buildings will rise in future as extreme weather events are occurring more often. They're saying premiums could even double, and that would impact homeowners as well as businesses, to a point where many could simply not afford insurance anymore. They even think that many insurance companies would go out of business as risks become harder to calculate and sometimes even uninsurable.
That's sad right there. What about the market? Is it reacting yet to this?
Well, the situation makes it clear that fighting climate change and cutting down on emissions is the main goal for our society, and that politics and businesses keep making this a priority. That means there will be more investment in alternative energy. Obviously, the shares of wind and solar manufacturers have been attractive for years, and they likely will be for some time, because demand is rising to a point, by the way, where companies right now don't even know how to satisfy all customers. The photovoltaic industry in Germany currently employs around 65,000 people, and they're saying they need 165,000. So they're looking for 100,000 people right now to manufacture, but also install solar panels and such. The industry is desperate for workers because it's not only current numbers that are showing growth, it's definitely also political will in Berlin to improve Germany's energy mix. So we're looking at a long-term trend and a certain stability in that sector. The latest calculations in Berlin are that the number of solar panels and wind turbines too, by the way, will have to triple by 2030, just so the country can reach its environmental policy goals that have already been established.
All right, Lars, thank you so much for that. Let's go to London now, where Juliana started an interesting conversation with Ladi in the morning. Juliana, good afternoon. I know you have updates by now. Former Prime Minister Boris Johnson is in the news, even though he is no longer Prime Minister.
You're absolutely right. There is a slight bit of technical difficulty we're having in the studio, so I do hope that you can hear me clearly, even if I can't hear you clearly, Innie. There is a lot to unpack, so do allow me to gaze down at my notes if we can. The top line is that the former Prime Minister Boris Johnson has been found guilty of misleading Parliament over Partygate on multiple occasions. For anybody who's had their head under a rock for the past couple of years, I'll just remind our viewers what Partygate was, which first came to the public domain in about December 2021, when the whole world was on lockdown in fear of COVID-19. Evidence started surfacing something suggesting that the Prime Minister, who almost died of COVID, remember he was actually in serious critical condition in a hospital at the height of the pandemic, he wasn't staying at home. He was partying with his colleagues in Westminster, very boozy parties we're hearing, and he denied it. He denied it on several occasions. He denied it in the House, where the allegation stems from. He also denied it during several committees that were set up after the revelations, and there has been a 14-month extensive probe, a probe by the Privileges Committee that's made up by many of his friends and allies in the party, and they have just this morning at 9 a.m. Published a 30,108-page document, 30,000 words, 108-page document, basically concluding that he knowingly misled Parliament. There is so much to get through, as I said, but some of the key points are that they said that Johnson was complicit in a campaign of abuse and attempted to intimidate members of the committee, that they recommended he should be suspended for 90 days, which is unprecedented. And I think that's one of the reasons why Boris Johnson did step down on Friday, because he had foresight of this investigation, and he knew that it was probably best to oust himself rather than wait for him to be pushed. He also said that he had no regard for the institutions, and I think that's what we can gather from the response, Innie, because there's been a visceral response from the Prime Minister this morning. He's called the Privileges Committee a kangaroo court. He said he is the victim of a witch hunt, really going toe-to-toe with Rishi Sunak here with no holds barred. And he also said that the conclusions are deranged. So a very scathing attack from the former Prime Minister, who is at loggerheads with the current Prime Minister, Rishi Sunak, because, of course, before Boris Johnson, to be totally honest, Rishi Sunak was a nobody, obviously had a very accomplished profile from America, but he was a very junior MP. He was made Chancellor, and now he's Prime Minister. And Boris Johnson feels most certainly that he has been stitched up by the Prime Minister. And I think if we just kind of zoom out a little bit and look at the state of brand Britain, Innie, and Westminster as a whole, it is at an all-time low. You know, Britain tries to position itself and fix itself as, if not the leader of the free world, which America is, but certainly somebody or a nation that other countries can look up to. But if you just look back at the past 12 months, the fact that we've had 3 prime ministers, 4 Chancellor of the Exchequers or ministers of finance, and now we've got this awful revelation about Prime Minister Boris Johnson, where they say he was intimidating witnesses, and now he's called the conclusions deranged. It's not great. So yes, I can say the grass is not greener. There is so much to go through as it is a 108-page document. But tomorrow, Channel's Business Global at 4:30, I will be going through all the findings with my colleague Simon Pusey and a member of the Labour Party.
Yeah, I expect you're going to have a great and robust conversation on this, Juliana. But is this affecting the market? I know you also have that Federal Reserve rate pause also as a factor. How are these moving? Which way are they moving the market to?
Well, the UK Blue Chip Index is actually in positive territory, and it's important and it's good that you mentioned the markets and how this has affected the markets, because, of course, we know that one of the reasons why the UK economy is suffering so much is because of long COVID. If you look at the labour market, we've got historically high vacancy rates at the moment, and one of the reasons why it's so difficult for people to find, employees to work for them is because many of them are suffering from long COVID. We had the worst death crisis in Europe during the COVID-19 pandemic, and that is affecting our economy. You're right about the rate decision last night. Of course, the central bank in the US is the most influential central bank in the world. They decided to keep rates on hold after, I believe, 10 or 11 consecutive increases. This is going to pile the pressure on our own central bank governor, Andrew Bailey, next week, because, of course, the Monetary Policy Committee decide on rates. Inflation is stubbornly exceptionally high here. They will want to push it up, but of course pushing it up has a knock-on effect on the housing market, which is in absolute turmoil. So yes, things are not looking great at the moment, but we can live in hope. To have a quick look at the data then, the all-share is up in 0.06% at intraday. The FTSE 100 is up by 0.15%, and the FTSE 250, the domestic market, that's down by 0.59%. In the currencies market, the British pound is currently trading down against the US dollar by 0.09%, down 2 against the euro by 0.09%, but up on the Japanese yen by 0.76% in E.
All right, Juliana, thank you so much for that update. Now, the urgent need to digitalize borders in order to facilitate the aspirations and objectives of African Union's flagship programs. One of it, of course, is the Africa Continental Free Trade Area, is top on the list and conversations. So the single market, air transport market, and the free movement of persons protocol is a major factor in driving this. We're speaking now with Jeremy Springall, Senior Vice President of SITA at Borders, joins us now to tell us how we can achieve this issue of digitalizing the borders. Thank you so much for your time, Mr. Springall.
No, thank you for having me on.
Yeah. So when we look at after it's how many years now we've seen progress. How much progress? Let's start from there. Do you see looking from outside the continent?
I mean, the opportunity that the Africa Continental Free Trade Area presents is immense. You know, we've got 1.2 billion consumers, and the gross domestic product of Africa combined is over $2.5 trillion. So the opportunity is certainly there. But ever since we announced the free trade area, there's been obstacles in their way. And one of the big challenges that is faced is at the border. So how can we move forward in a way that enables governments to protect their national borders from security threats and other threats, but equally find a way of opening up their borders to allow trade and travel into their countries in terms of both goods and people. And that's going to be essential if we're going to see the growth that we expect from these big initiatives like the Continental Free Trade Area.
Yeah, so when you talk about digitalizing the border, what exactly do you mean? What's the picture? What does it look like?
Yeah, so if you imagine the border today, in most borders, whether it's a land border, an air border or a sea border, quite often we'll need to queue up at immigration and go through a number of checks, whether that's goods or people. In the future, we see a world where the border is digital, and the key element of that is to be able to pre-clear goods and travellers before they even reach their border, ideally before they even start their journey. And if we know and we've risk assessed those goods and people before they reach our border, when they arrive, it should be a much more seamless experience. So that pre-clearance is essential. And there's a number of elements to that, but the most critical one is around digital identities. So across Africa, we're seeing many countries implement digital national ID cards that could be used for international travel across Africa, or particularly across the region. And we're also seeing a lot of international standards being developed, the main one being from the part of the UN responsible for passports, which is an organisation called AGOA. They're introducing the digital travel credential, which in effect is the digital version of the passport. And that will enable us as travellers to be able to share our passport data in advance of travel, including our biometrics, which is typically held in a passport. And therefore governments can risk assess this in advance. And then when we arrive at the border, all we need to do is really walk across the border using our biometrics. So a very seamless border experience. So that sort of pre-clearance is absolutely key to this.
Yeah.
There's a couple of other key areas just to mention quickly. One of the big things that COVID taught us was around our border rules and the impact of the border. Our border rules very rarely changed pre-COVID. They were very static. And one thing that COVID showed is that we need to move to more of a dynamic border, one which could change based on real-time events.
All right.
Whether they are security events or whether they are opportunities to encourage trade into our country for a period of time, or for a big event, big sporting event. How do we get people into the country?
All right.
So moving towards more of a dynamic border is really key.
All right, Mr. Springle, we're almost out of time, but we will invite you to come and elaborate on this more subsequently on our business programs here. We do hope that you will be available for that.
Absolutely.
Great. So that's Mr. Jeremy Springle, Senior Vice President of SITA at Borders. And thank you so much for your time. I'll talk to you next time soon.
Thank you.
All right, now let's come to Nigeria, where the annual inflation rate rose to 22.41% in May 2023. That's coming from 22.22% in April. And that's according to the latest inflation report released by the National Bureau of Statistics. The figure, which represents a 0.19% month-on-month increase, marks the fifth consecutive month inflation that has risen in the country, despite the sustained hike in monetary policy rate by the CBN's Monetary Policy Committee in its attempt to slow the pressure. Major highlights of the data shows that food inflation rates jumped 24.82% in last month from 19.50% due to higher price of basic food commodities. Core inflation also climbed to 20.06% because of high cost of transportation. Well, in April, the Nigerian Export Promotion Council revealed that cashew nuts exports from the country hit 116 billion naira. That's about $252 million for the year 2022. This, according to Mr. Yakosak, makes Nigeria the fourth highest producer of raw cashew nuts in Africa, with approximately 19 states involved in this. But this is not the best yet for Nigeria. We have joining us to discuss this, Victoria Momo joins us from Victoria Island for the second time this week. Victoria, hi, good afternoon.
Good afternoon, Amy. Thank you for having me.
So are there conversations about how to deepen this production in this 19 states, and more importantly, adding value or the value chain of the, instead of exporting the raw cashew nuts?
You see, I totally agree with you based on what you said regarding the we not getting the full potential of the cashew industry. And of course, there are actually conversations regarding the improvement of production as well as value addition in the production of cashew in the country. And the Nigeria Export Promotion Council has actually launched a particular program called the Organic Cashew Export Certification Program. And this is to support the cashew industry in terms of improving productivity, efficiency, and also supporting the gradual shift towards organic cashew production, compared to the conventional cashew production that we do. And we've seen the likes of companies like Valerie that actually invest in cashew production to refine cashew production to increase the production of cashew in the country. And then again, you also made mention of the fact that we had over $250 million earnings from cashew export as at 2022. But I mean, that is not enough, because we have the potential to actually get more. Like you said earlier, we have the potential to get more, but we are being restricted or limited by low value addition in the cashew industry. And this is due to the fact that there is poor investment in the processing plants in the country. Nigeria actually processes only 10% of the total cashew that are actually produced in the country, and export about 90% of the cashew that is produced out of the country at lower prices to the global market. And then this market actually process this cashew and then send it back to the country, and we import it and also pay higher prices for this commodity. So I would say that the raw form of cashew actually is lower or yields lower earnings compared to the one that is actually being processed, and that is the problem. So if eventually we are able to tackle the issue of processing and manufacturing, we could actually add more value to our cashew and then yield more earnings and also create employment.
All right, Victoria, thank you so much. I think you very much captured all of that there, the need, to improve that 10% that is processed before exporting. Thank you so much for your time, Victoria Momo, analyst with Financial Derivatives Company.
Thank you for having me.
So just before we go, let's go to South Africa, where South Africa's Department of International Relations and Cooperation says that there's been no official decision by the State Department There's been no official decision by the State Department to move the venue of the White House, to move the African Growth and Opportunity Act conference from South Africa. This comes as 4 members of the United States Congress presented a letter to the United States Secretary of State Anthony Blinken asking the White House to move this year's AGOA conference away from South Africa over the country's non-aligned position on the Russia-Ukraine conflict. Well, that conversation is still on, and we'll see how it ends. Thank you so much for being a part of Business Incorporated today. I'm Ini John Mekwa. Enjoy the rest of your day.